For decades, the United States has been Europe's go-to supplier for liquefied natural gas, LNG, particularly after the European Union moved to cut its reliance on Russian energy in the wake of geopolitical tensions. American energy companies benefited immensely from this shift, securing multi-billion-dollar deals that strengthened the U.S. economy and reinforced its position as a dominant force in global energy markets. But now, in a surprising and game-changing move, Europe is turning away from American gas and looking toward Canada as a new strategic partner. This decision is more than just an economic adjustment. It signals a fundamental realignment in global energy trade that could permanently weaken America's economic power. The impact on the U.S. will not be limited to the energy sector alone. With contracts slipping away and investments threatened, the loss of the European market could trigger a chain reaction of economic disruptions, affecting American jobs, trade balances, and financial markets. Stay with us as we break down what this shift really means for the future of the U.S. economy. And don't forget to like, share, and subscribe to Economy Explorer so you never miss these critical updates. Is America overpricing its gas and losing its biggest customer? At the core of Europe's shift is a growing frustration with the high cost of American gas. When the EU turned to the U.S. as an alternative to Russian energy, it did so out of necessity, not affordability. American LNG has consistently been among the most expensive options on the global market, and Europe is no longer willing to absorb those costs. While U.S. gas exporters initially capitalized on high demand and limited supply, their aggressive pricing strategies are now backfiring spectacularly. Europe has realized that American gas is simply too costly in the long run, and as new suppliers enter the market, the need to remain locked into expensive U.S. contracts has all but disappeared. Canada, in contrast, offers lower transportation costs, more stable long-term pricing, and an energy policy that is free from the volatility of American politics. The EU sees this as an opportunity to lock in cheaper, more predictable energy sources without the constant risk of price surges and political disputes that come with relying on the U.S. Did U.S. political leverage push Europe away? Beyond pricing, another major factor in this energy shift is the geopolitical leverage that the U.S. has long wielded over its energy exports. European policymakers have expressed growing concerns that Washington uses its position as an energy supplier to dictate political terms, putting Europe in a vulnerable position. By contrast, Canada's trade policies are seen as less aggressive, more stable, and free from the same kind of political pressures. Unlike the United States, which frequently revises tariffs, sanctions, and trade agreements, Canada has presented itself as a neutral, business-friendly energy partner that offers long-term reliability. European leaders are increasingly wary of being caught in the crossfire of American domestic policies, which frequently result in sudden shifts in trade regulations and energy export rules. While the U.S. energy sector has been a powerful force, the uncertainty it brings has made it less attractive as a long-term partner, and European nations are now prioritizing energy security and stability over historical alliances. Can Canada deliver? Or is this another energy gamble? Europe's pivot to Canadian gas is an aggressive and strategic move, but is it practical? Canada's energy sector is expanding rapidly, but at present it lacks the full-scale infrastructure that the U.S. has spent decades developing. Currently, Canada does not have enough LNG terminals to immediately replace U.S. exports, but that is changing fast. Massive investments are flowing into new LNG facilities along Canada's east coast, designed specifically to cater to European demand. These projects, once completed, will make Canadian gas far more accessible and position Canada as a serious competitor to U.S. suppliers. European nations are willing to wait because they see long-term benefits in Canada's energy strategy, particularly in terms of cost and environmental sustainability. This raises an urgent question for the U.S. If Canada can successfully scale up its LNG exports, will other major global buyers, such as Japan, South Korea, and India, also abandon American energy in favor of a more affordable, stable supplier? If so, this would not just be an economic setback, it could mark the end of U.S. dominance in global energy trade. How will this impact the U.S. economy? Losing the European energy market is not just a small dent in the U.S. economy, it is a devastating financial setback that could ripple across multiple industries. The American energy sector, a vital pillar of the economy, is deeply dependent on exports to Europe. If these contracts disappear, the financial damage will be profound. The energy industry employs millions of Americans, from gas field workers to logistics operators, engineers, and traders. If demand for U.S. gas declines significantly, job losses will follow, leading to higher unemployment rates and economic instability in key energy-producing states such as Texas, Louisiana, and Pennsylvania. Additionally, the trade deficit will likely expand as U.S. exports shrink, further weakening the economy. Beyond direct losses in revenue, there is also a growing concern about investment stagnation. Energy companies have spent billions on LNG infrastructure, expecting continued demand from Europe. If that demand disappears, future investments in U.S. energy projects may dry up, leading to a slowdown in industrial expansion and economic growth. Investors may also start pulling out of U.S. energy stocks, causing market volatility and further destabilizing financial markets. With these risks looming, the U.S. must act quickly to prevent a deeper economic crisis. Could this be the start of a broader U.S. economic decline? The U.S. economy has long stood atop the global energy pyramid, using its dominance in oil and gas exports to dictate trade balances, influence foreign policy, and fuel its own economic expansion. But now, that foundation is cracking, and the repercussions could be far more devastating than most realize. Europe's decision to pivot away from U.S. gas isn't just an isolated event. It could set off a chain reaction that reshapes entire global trade flows, leaving America vulnerable in ways it hasn't been for decades. If other major energy buyers, particularly in Asia and South America, see Canada, Qatar, or even a post-sanctions Russia as more stable, cost-effective, and geopolitically reliable suppliers, then the U.S. energy sector, the backbone of its export power, could begin a slow but irreversible decline. The world runs on energy, and whoever controls the flow controls the global economy. If the U.S. loses its grip on this key sector, it won't just mean lost contracts or a few struggling corporations. It will mean a seismic shift in economic power, a weaker dollar, vanishing trade leverage, and a loss of the strategic advantages that have allowed America to remain the world's dominant force. Energy isn't just a commodity. It's a weapon, a currency, a tool of influence. And right now, the U.S. is watching that weapon slip from its hands. If this trend continues, America's ability to steer global financial markets, negotiate from a position of strength, and protect its economic supremacy will be severely weakened. What once seemed unthinkable, a world where the U.S. is no longer the leading energy superpower, is now inching closer to reality. What can the U.S. do to stop the economic damage? With so much at stake, the U.S. must take swift action to reverse its energy losses and prevent Canada from taking over its market share. The most effective solution would be to reduce LNG prices to remain competitive. If American gas remains the most expensive option, there is little reason for Europe to reconsider its decision. Additionally, the U.S. could introduce more flexible long-term contracts with European nations, removing the restrictive conditions that have frustrated energy buyers. Rebuilding diplomatic ties with the EU is also crucial. If Europe regains confidence in U.S. trade policies, it may reconsider the shift toward Canada. At the same time, the U.S. should invest more heavily in green energy alternatives, as Europe's energy strategy is increasingly aligned with carbon neutrality goals. If America can position itself as a leader in renewable energy exports, it may still be able to regain its influence in the European market. Is the U.S. at risk of losing its global power? The decision by Europe to abandon U.S. gas in favor of Canada is not just a trade shift, it is a historic turning point that could permanently reshape America's economic future. For decades, the United States leveraged its energy dominance as a pillar of global influence, dictating terms, setting prices, and keeping allies dependent. But now, that power is slipping away. Europe, once one of America's most loyal economic partners, has signaled that U.S. energy is no longer worth the price, the conditions, or the instability. This isn't just about gas, it's about global leadership. Energy is the lifeblood of economic power, and if the U.S. loses control over its most strategic export, the consequences will ripple far beyond the oil fields and LNG terminals. Wall Street will feel it. The stock market will feel it. American workers will feel it. And while Washington scrambles to respond, Canada is quietly rising, positioning itself as the next big energy superpower, one that Europe trusts more than the United States. This is a wake-up call for America. The world is shifting, and if the U.S. doesn't act fast, this moment could be remembered as the beginning of the end of its economic supremacy. So, what happens next? Can the U.S. reclaim its position, or has Canada already won the future of energy trade? Let us know your thoughts in the comments below. If you found this video insightful, like, share, and subscribe to Economy Explorer to stay ahead of the biggest economic trends shaping our world. And before you go, check out one of the videos on your screen now. We break down more high-stakes shifts in the global economy that you can't afford to miss. Thanks for being part of our channel. We'll see you in the next one.